The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. And let's take a look and see what the markets are doing today. S&P 500, it's up 33.88. The 10-year Treasury yield up 2 basis points. Mortgage-backed securities down 22 basis points. And as we do every morning at this time, OBMMI provides the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide, conforming loans yesterday actually locked at 5.299%, regardless of what the advertising is telling you on TV and radio. 5.299. Again, that's over 35% of the locked loans. It is an average, so some were lower, some were higher. 5.299. Strategically speaking, our team does know how to show you how to get the best programs, the best products out there. So we can show that to you. But the real question becomes, why are we seeing what we're seeing? What is driving the market? And once again, it's housing bubble fears. We get people like Diana Olick, and I hate to pick on her, but, you know, I wish you would just, maybe she should tune into our show, because for the last 10 years, she's been wrong. And I say this all the time, and I get people laugh at me. The next time she comes up with accurate information about housing, it'll be the first time. So I highly recommend discount everything she has to say about the housing market, because, again, they just continue to get the data incorrect, and then they start scaring people into believing what they're saying. So here's some facts of what's going on. Pending home sales measured signed contracts on existing homes fell 1.2% in March, much stronger than the 1.8% decline expected. Sales are now down 8.2% year over year. There is no doubt that higher interest rates could be impacting demand, but this is still very strong considering the increases in prices and lack of inventory. Again, the media said that this was a washout, but it was only down 1.2% in the face of all these challenges and better than expected. Unbelievable. A longer time frame view of signed contracts shows that the level of sales is still at a strong level, but off the crazy highs we set after the dip in COVID and rush to purchase. Just unbelievable that they keep coming up with this wrong. CoreLogic released their single-family rent index this week, showing that rents in February were up 13.1% year over year, which is the highest increase on record. This report includes both new rents and renewals, which are increasing between 6 to 8%. So new rent goes up more, renewals are going up less. The way it works, make sure to explain and understand that renting is not a better option, especially when considering the benefit of amortization, appreciation, and mostly fixed cost with purchasing. Redfin released a report stating that home buyer competition dropped for the first time in 6 months amid surge in mortgage rates and home prices. But they went on to say that most home buyers are still encountering bidding wars, but competition is beginning to cool. As we have stated many times, we think demand will subdue a bit, but there will still be a huge imbalance in supply and demand, which will be supportive of home prices, albeit probably not the 20% like the past year, but high single digits. That's actually healthier. We don't want to see the numbers continue. The MBA released their mortgage application data for the week, showing that purchase application volume decreased by 7.6% last week and is down 16.6% year over year when factoring in cash buyers who are buying homes but not taking out mortgages, down closer to 13%. So we are seeing all of these different data points. So what I'm really saying here, and various reports are confirming the same data, is that we're seeing a slowdown in real estate. That does not mean we're going backwards. Think of a slowdown as if you're driving down the freeway at 65 miles an hour and you take your foot off the gas. Are you going backwards? No. You're just not going to keep going quite as quickly. So the bottom line there is that's where we are in real estate. We're not going to continue going at the same rapid pace that we've been going on, but we're going to continue moving forward. Markets, there are some markets we're actually seeing that are buyers may be seeing lower prices. Believe it or not, I looked at the list and I said, okay, well, Toledo, Ohio, got it. Down 8, median listing price down 18.7. Rochester, New York, okay, median listing price down 17. Detroit down 15. Pittsburgh down 13. Springfield, Mass down 5. Tulsa, Oklahoma down 5. And I said, who cares? Until I got to Los Angeles, California, down 5%. So the median listing price is $985,000. So that is down 5%. And I just told you about Orange County on their numbers and couple of different cities in Orange County. Should we take a look? Do you want to take a look at the idea, the concept here? Maybe you want to understand what are we thinking about? How about if we were to look at maybe how about Palm Desert? Do you think Palm Desert might be a good place for us to look at? I like going to Palm Desert on a regular basis. You might enjoy Palm Desert. Maybe you have friends, family, coworkers that go to Palm Desert. What is their real estate looking like? Okay, well, the median list price, $1,300,000. New median prices of the properties coming on the market of $899,000. Average days on the market is 50, and they are already in the uptrend. So the median days on market is 21, going up. That part is something that you might not be happy about. Last Friday, or the 8th of April, it was at 14 days, telling us again that market is slowing. Prices increased 16%. Prices decreased, 16%. Increased 4%. Properties that came back on the market, 4%. Inventory's got a 45-day supply of inventory. That's gone up a little bit. And the median rent is 45. So we're starting to see things balancing out. And I'm not saying that that's something that's bad. I'm just telling you what the market's doing. And you need to be aware of that. Now, I'm going to also share with you that we are seeing, according to a report in the National Association of Realtors, home prices remain high. Mortgage rates are rapidly rising, but home buyers are still hopeful about this spring. It's a new survey from OJO Labs. That's a real estate search site, shows that at least half of buyers believe the next 3 months will be a good time to buy a home. And I'm going to share with you the best mobile app on the market, best mobile app, not just because we give it to you, but that is part of the reason. If it wasn't good, we would not be giving it to you. But go and grab the app at sltloanapp.com. sltloanapp.com. You can go on there and grab the mobile app. And in this mobile app, you're going to get all kinds of really great information about the properties. Scott Smith is with us. Great to see you, Scott. Glad you're enjoying the information. Go on the app, grab that. There's all kinds of great data. There's a mortgage calculator on there. Believe it or not, in the world of real estate, the mortgage calculator is actually the most searched for item on there. So that one is great. When we go out there, you'll also have a direct link to the home shopping site, the one with no advertising, rsrhomescout.com. So I spoke to you about that earlier, but rsrhomescout.com, no advertising on there. So I highly recommend you grab that. And, we may start seeing this because one of the issues that comes up that we find frequently is that when we start to see the market turn a little bit, appraisers are looking at this information and they understand when the market is turning, and they may get a little bit more conservative on their appraisals. So if you go to rsrappraisalgap.com, we've actually put together a tool for you that's going to help you if there is an appraisal gap. Now, it does not work on FHA loans where you're putting the minimum down payment. Doesn't work on conventional loans with a 3% down payment. But our rsrappraisalgap.com works with a lot of loans where maybe you need to help with trust income. Maybe you don't want to use all of your capital as a down payment. You don't want to have all your capital invested in the property. Maybe you get an appraisal that comes in and it doesn't work out to your favor, but you want the property. Well, there's a few different tools in there. The Appraisal Gap product is something that we've been doing a lot with folks, sharing with them how to deal with it. Great, great tool. And just yesterday, we actually came out and released a new program for doctors. So if you are not PhDs, but medical doctors, a medical doctors, dentists, veterinarians qualify. How about no down payment, no mortgage insurance for doctors? So that's a product that we've just released yesterday. And it goes along with the programs that we've had right along for business owners. If you're a business owner and you got a great accountant, you write off everything possible, you leave money in your corporation to grow, but you say, something, I got a problem because now I want to buy a house. I just mentioned our friend Scott Smith. He's got a great property over there in Peralta Hills. I don't know if it's sold or not, but I did see the pictures and whatnot of it. But Scott had a great property there, has a great property in Peralta Hills, a listing. Well, maybe you're a business owner and you don't, the total of what you earn doesn't flow all the way through to your personal income taxes and your W-2 or 1099, but you've got the money to make the payments. Well, there are programs for business owners where we have alternative income sourcing options. I'm not going to get into all the underwriting guidelines and whatnot here, but just know that if you've got some questions about that, give a call to our team at 800-306-1990, 800-306-1990. Team is standing by and will be standing by to help with whatever we can help with.